Hello, welcome to the European Open briefing for Friday, April 27th. I'm Rafi BoJ, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. The US dollar is climbing towards fresh 3.5 months highs this morning, ahead of US GDP numbers for the first quarter later today. The yen, although it's slightly weaker against the dollar, it is actually firmer against other majors this morning after the Bank of Japan removed its inflation target time frame at the end of its two-day monetary policy meeting this morning. The euro is struggling following the ECB's policy meeting yesterday. It's fallen to more than 3 months lows against the dollar, and other majors are still struggling against the resurgent US currency, the Aussie and the Kiwi extending their week-long losses further this morning. So let's take a closer look at the US currency now. We can see dollar index, dollar yen, that week-long uptrend here in the chart. Dollar yen does appear to have met some resistance just below the 109.50 level. That perhaps could be due to the fact that the 10-year yields have also stalled. They're actually slipped back below 3% this morning. Dollar index, though, continues to climb upwards, hitting fresh 3.5 months highs, going as high as 91.75. Also boosting the dollar is more positive US data. Yesterday we had both durable goods orders for March and the weekly jobless claims beating expectations. And later today, we're going to see the preliminary estimate of the first quarter GDP numbers, which they are expected to show a slowdown in the first quarter, but that's unlikely to have much impact on Fed policy. The Fed, of course, meets next Wednesday for its May meeting. We also have PC inflation coming up on Monday and the April jobs report next Friday, all of which will be closely watched. Let's now move on to the Bank of Japan, because although they did keep policy unchanged, there was a little bit of change in their language. They now removed reference to the time frame of when they expect to meet their 2% inflation target. Previously, they had said they expect to meet this target in fiscal year 2019. They've now removed that time frame altogether. So that does suggest that the Bank of Japan is now, on the one hand, being more realistic, given how slow inflation is in terms of moving upwards. At the same time, it does mean that the Bank of Japan now feels under less pressure to speed up that progress, potentially removing the possibility of loosening policy further in the near future. So that's been perhaps somewhat positive for the yen this morning. We can see the euro and the pound both falling against the Japanese yen this morning. The euro, of course, had already come under pressure yesterday after the ECB meeting. The Bank of Japan Governor Haruka Kuroda didn't attach too much significance, though, to that change in language. He said that the time frame was always a forecast, not a binding deadline. Let's now turn on to the euro, because it's pretty much been on a steep downtrend since last Thursday. It's now fallen to 3.5 months low, 1.2063 against the US dollar. It's also down sharply against the pound. So we didn't really hear much new from the ECB yesterday, but the markets were disappointed that ECB President Mario Draghi didn't provide a clear signal that the next change in policy, or in communication at least, would come as early as the June meeting. So this has now pushed back expectations to any changes to policy being announced coming in July and possibly as late as September, when the current program expires. So that's been somewhat negative for the euro. Also, the euro did rise briefly, though, when Mario Draghi in the press conference didn't appear too concerned about the exchange rate. But overall, the fact that the ECB remains not as confident about inflation as it is about growth. Mario Draghi reiterated that underlying inflation remains subdued and not yet showing convincing sign of upward trend. All of that drove the euro lower against all its major peers. Also struggling is the Swedish krona. Yesterday, the Riksbank unexpectedly pushed back the timing of when it expects to start raising interest rates in Sweden to the end of the year, as opposed to sometime in the third quarter. Primarily due to a sluggish inflation outlook. We saw the Swedish krona tumbling to an 8-year low against the euro to 10.5345 and a 10-month low against the dollar, hitting as low as 8.7231. The pound is also struggling. It's fallen further this morning to 1.5 months low of 1.3869 against the greenback. We've got first quarter GDP numbers coming out of the UK as well this morning. If they do beat expectations, that could perhaps provide some support for sterling. And our final pairs, the Australian and New Zealand dollars, we can see both pairs falling against their US counterpart for much of the past week. The Aussie has now fallen to a 4.5 months low of 0.7530. The Kiwi slumping to 4 months low of 0.7038, coming close to breaching the 0.70 handle. We had Australian producer prices this morning. They remained fairly muted at 1.7% in the first quarter, and New Zealand posted a trade deficit in March compared to a surplus in February, so that data also is weighing on both the Aussie and the Kiwi. But the main reason for that downtrend in both pairs is the widening yield differentials with the US. It's going to be a busy calendar today. We can see that data out already. We did have a batch of data out of Japan as well, which were more or less in line with expectations. So the main focus, though, will be UK GDP, Eurozone Economic Sentiment Index, and US GDP. And as well as the University of Michigan Consumer Confidence Index. That's it from me. Thank you very much for watching and have a great day.